that you are able to split the normal time and the overtime. You must be able to do that calculation, because once you manage to do that, it will be very easy for you, because you're just going to multiply by the rate. So the complication they can give you, as you saw from this question, they told you about a holiday, which was Monday. Monday was a public holiday. They're trying to tell you that you have to be able to understand that Monday, since Monday was a public holiday, and if the employee worked on Monday, Monday would be considered a holiday. And they're trying to tell you that since we have 40 hours in a week, now if we say Monday was a holiday, we need to subtract the 8 hours for Monday, which means there's only 32 hours in a week. That is a normal time for that particular week that has a holiday. So in a week, if there are 2 holidays, which means the normal time for the week will be 40 hours minus 8, right? Then we're going to end up having how many hours? We're going to end up having 24 hours for that for that week, right? Which is a normal time. So 8, 16, 24, only 3 days is a normal time. So you must be careful on that. Okay, and then now we're going to move on to deductions. I think I'm gonna move quick on deductions. We just need to understand what are the deductions that we're going to subtract from this gross wage, because if you have a gross wage and you have a gross salary, if you have a gross wage and you have a gross salary, which is a salary that has no deductions being deducted on, we need to be able to understand that we still need to subtract deductions so that you get the net salary, because the amount of money that goes to your pocket as an employee is a net salary. So now you can earn, for example, let's say your gross salary, for example, is 50,000 rands, right? If you're earning a gross salary of 50,000 rands per month, this is not the amount of money that will go to your bank account. No, right? We still need to subtract what? Deductions. We still need to subtract deductions, and those deductions, we're going to have what? Pay as you earn. That is the first one, maybe 10,000. That is going to be tax, right? That is going to be your tax. Yes, we're going to have UIF. Very good. We're going to have UIF, of which UIF is calculated as what? As 1% of your as 1% of your salary, né? And but also it is limited to 127 rands. Let me just say you will have a UIF of 127 rands, for example. And then what else? Let's say we have a medical aid, né? Medical aid, maybe I'll just say minus 1,200 rands. That is for medical aid. Maybe the last one is going to be the pension fund. Just gonna make an example. Pension fund, let's say maybe there's 350 there. That has to be subtracted. Okay. Then now your net salary. Your net salary will end up being how much? We're going to take 50,000 minus 10 minus 127 minus 1,200 minus 350. You end up left with 38,000. Can you see? Which means that is going to be your net salary. This is the amount that is paid into the employee's bank account, right? The employee's bank account, right? You can see here that you earning 50,000 rands. That is your gross salary. But what comes to your bank account is how much? 38. You see? So it's very important that we understand these deductions and their role in your gross salary. So earning 50,000, it doesn't mean that you're going to receive 50,000 in your bank account. You still need to pay tax. You still need to pay UIF, medical aid, pension fund. These are normal deductions that we usually have, right? These are normal deductions that we usually have, and these are deductions that we're going to talk about now. Okay, before we go there, look here. Here we have a wage journal. Wage journal is something that I'm going to do with you tomorrow, yeah? Because it's something that is going to be on your test on Monday. Salary journal, it's something that we're going to do salary journal, I'm going to do it with you tomorrow. We're going to be recording here. Cash payment journal, I'm going to be doing this with you tomorrow. And then we're going to do a general ledger, right? We're going to do what? A general ledger of TED stores, which is creditors for salaries, we have creditors for wages, we have SARS pay as you earn, we have SARS skills development levy, we have pension fund, we have a medical aid, we have a salaries, UIF, we have salaries, UIF, okay. I have two of these, I need to remove one. Okay, we have wages, we have skills development levy, we have pension fund contribution, medical aid contribution, UIF contribution. So can you see how many general ledgers that we're going to do? All of these, starting from creditor for salaries up until the UIF contribution. These are the general ledgers that we are going to do with you. Is this what you're going to write on Monday, ne?
Yes.
Okay, perfect. We're gonna be looking at it tomorrow then. For now, for today, okay, here I have a question that I'll be doing with you tomorrow. This is a practice question for salaries and wages. This is the one we're going to use as our example, where we're going to complete a wage journal on 28 October 2009. We're going to complete a salary journal on 1 October 2009, and then makes payments from the cash payment journal. And then we're gonna be doing all the general ledgers, because you can see here they're saying close off journal goes to general ledger, right? So which means we're also going to do a general ledger. Again here, close off the journal, post to the general ledger. So we also going to do the general ledger. Also, we do a CPJ and then we post to a general ledger. So there will be a lot of work that we're going to be doing tomorrow, recording all these journals and then recording all these general ledger. Once we have done that, I think it will be okay for you to go and write a test. Okay. Let's go to today's work that we need to do. Deductions. When we're talking about deductions, Limani, you must know very well that we are talking about those amounts that will be deducted from your gross salary. Yeah, they will be deducted from your gross salary until you get your net salary. Right? Once you have your net salary, there's nothing else that you're going to deduct from that amount. From net salary is the amount that comes to your bank account as an employee. That is the amount that you're going to use for your monthly expenses. If you have to pay your car, you have to pay electricity, you have to buy grocery, you have to pay school fees and all of those things as an employee, you're going to do all of that from your net salary. But from the gross, we still need to subtract all the deductions, right? That has to be taken out. Otherwise, there's no way that you can earn 50,000 and get paid 50,000 in your bank account. It doesn't work like that. Okay. Now, deductions. What are deductions? So here they're saying certain deductions need to be made before workers can receive their net salaries, right? Certain deductions needs to be made before workers can receive their net salaries or net wages. That's what I'm saying. Before you can get your money into your bank account, there are certain deductions that we need to make from your gross salary or your gross wage. Before I pay your money into your bank account as a worker or as an employee, I need to make sure that I subtract certain deductions. There are certain deductions that has to be made from your salary, from your gross salary, before I can pay your net salary into your bank account. Okay. Some of the deductions are compulsory, you see, while others are not, right? Not all deductions are compulsory. Some of them you have to choose for yourself to say, I need this, I want this, I don't want this. For example, medical aid. Medical aid it's a choice. This one is not compulsory. It's a choice, right? It's a choice. If you want to, but some companies may enforce you to take medical aid. Sometimes it depends on the company you're working for. Sometimes they can say you have to take medical aid. So, but we are going to see which ones are compulsory and which ones are not. Okay, we're going to look at theory more. Please, you need to take some notes along the way now. You need to take some notes, okay? The employee may also request certain deductions from his or her salary, like bond repayments. Can you see that? Bond repayment is not a deduction based on your employment contract, right? When you're signing your employment contract, you can see here, there is no bond deduction here, but you may request from your employer to say, from my salary, I want you to deduct, you may request and say, I want you to deduct what? Money for my bond repayment, right? So which means now they're adding another deduction. It was not compulsory, right? But you chose that I want my employer to deduct maybe 3,000. That will go towards my bond repayment. Even your car installment, if you're paying for your car, you can ask them to say deduct 5,000 and pay over to the bank for my car installment. So that is your choice. You are allowed to do that as an employee, right? Now they're saying the following deductions are explained. We need to talk about the following deductions. Number one, pension fund. That's the first one we're going to talk about. We need to know whether pension fund is compulsory or not, and what kind of deduction is pension fund. Number two, we're going to talk about income tax. We need to know whether income tax is compulsory or not, and what kind of a deduction is an income tax. Number three, we are going to talk about the medical aid fund contribution. Okay. We're also going to talk about unemployment insurance fund. That's another deduction that I'm going to talk about with you. Skills development levy. It is a deduction that I'm going to talk about with you. Remember, I told you that this one is paid by an employer, right? It is paid by the employer. Then we're done. So these are the only deductions that we're going to talk about. 5 of them, according to the scope of grade 10, 5 of them that I'm going to talk about. So if you have a question, you don't understand something, let me know. Ne? Let me know, okay? 4.1, let's talk about the first one. Pension fund. What is a pension fund? Pension fund, they're saying here, in most cases, pension fund contributions are compulsory, right? For all employees, right? In most cases, they are compulsory, which means you have no choice. You have to pay medical aid pension fund contributions from your gross salary. We have to deduct it. Employees contribute to pension funds in order to save money, right? In order to save money for when they go on pension, right? This is done by deducting a percentage of their gross salary. When you retire at the age of 60 or at the age of 65, obviously at that time, I don't think you will still be able to work for yourself, right? So you will need this money. These are like savings for you. It's an investment for you that you will get when you reach a retirement age where you are unable to work for yourself. You are going to sustain yourself with these pension fund deductions that are made from your salary. This is the first one. Pension fund contribution, it is deducted from an employee's salary for future use. It's like a saving for when you go on pension. That is pension fund contribution. In most cases, they're telling you that in most cases, pension fund contributions are compulsory for all employees, which means you cannot choose. You have no choice here. When you're signing a contract, it is compulsory that you contribute to a pension fund, okay? The employer may also make a contribution, right? The employer, which is called employer contribution. Both employer and employee contributions are paid to the pension fund on a monthly basis. You see, so now if you are paying 350 on a pension fund contribution, your employer as well will also contribute, right? Employer also contributes how much? 350, right? employer will also contribute the 350. So which means now, how much will be the total that will be paid over to a contribution fund? It is going to be 700 rands. Okay, will be paid to the pension fund. What is the pension fund? Pension fund, this pension fund, we talk about an institution here that is handling money, right? It is an institution that is handling money for people who are saving for their retirement. So when we deduct 350 from the employee's salary, we are also going to contribute 350 and take 700 rands paid over to the pension fund. We do have a pension fund institution, one of them with Alexander Forbes, right? There's one called Alexander Forbes. This is where these 700 rands will be paid to, right? This is where the 700 rand will be paid to. Alexander Forbes is a financial institution. They're going to keep this money for you for the time when you retire, and then they give it back to you. Do you understand what I'm saying, Limani?
Yes.
Yes. Does it make sense?
Mm-hmm.
Okay, if you have a question, please let me know. But a pension fund is one of the deductions, that are compulsory, right? It's not really compulsory. Let me be honest with you. Pension fund is not compulsory for every employee, but in most companies, it is compulsory. They decide for themselves to say, all our employees, it is a must that they contribute for pension fund. So there will be a deduction of a pension fund from all our employees. So if you don't want that, you can leave. We're not going to hire you. If you want to work for our company, you must expect that pension fund will be deducted from your gross salary. That is a pension fund. So one of the deductions we have. Income tax. This one, whether you like it or not, you can cry if you want to cry. We're going to deduct it. Né? This one is not a choice. It is being deducted to everyone who is working. However, there is something called a threshold, right? It is not being deducted to everyone. You must earn at a certain amount before we can say we're going to deduct, right? Before we can say we're going to deduct income tax. I'll tell you how much currently in South Africa. How much currently in South Africa that you need to earn before we can say we're going to deduct tax for you. 8,250 rands. 8,000 rands, 250. 8,250 rands. Okay. 8,250 is what? Is a threshold, right? Is a threshold. Okay, something called a threshold. Tax threshold. Okay. 8,250 is what? Is a threshold. What do I mean by this? Is that if you're earning less than 8,250, no tax will be deducted from your salary. But if you're earning more than 8,250, definitely we're going to tax you. So as much as this is a compulsory deduction, it is not deducted to everyone. No. People who are earning 5,000, 6,000, 7,000, they're not paying tax, those people. Because that money, we understand that it is not enough. If we tax you on that money, how are you going to survive? There's no way you can survive, because if we tax the 7,000 rand salary, how are you going to pay your rent? How are you going to buy grocery? How are you going to have transport for you to go to work? That's why we say only those who are earning above 8,250, they are going to pay tax. But let's talk about that here. Income tax, each citizen is expected to pay income tax. Everyone, right? Everyone who is in South Africa is expected to pay income tax. It is not It is not a choice. It will never be a choice, right? The amount is calculated according to the employee's taxable income. Yes, there is something called taxable income. The amount is calculated based on that. What is the taxable income? This is a gross salary minus pension fund contribution. Can you see? Gross salary minus pension fund contribution. Then we need to check there how much you have. That is the amount that will be taxed. That will be a taxable income for you, right? That will be a taxable income for you. As a grade 10 student, I'm not expecting you to know how to calculate taxable income, how to calculate tax. They are going to give you a tax amount, but what you need to know is that tax amount is a deduction that has to be deducted from gross salary. And that tax, we call it a pay-as-you-earn. Let's carry on. The amount is calculated according to tables provided by South African Revenue Services, which is SARS. There is a method, yes, that we use to calculate tax that has to be paid by all employees in South Africa. And we are following what? Tax tables provided by South African Revenue Services, which is SARS. These tables change constantly as they are determined by the Minister of Finance in his annual budget speech. Have you seen SARS tax tables before? Have you
No.
seen? You've never seen it, né? Let me try to show you what is that. Let me try to show you what is that, because those are the tables that we're using for us to do what. Those are the tables that we're using to do the calculation. Can you see? This is the one for 2027 tax year, which means now, currently, someone who is at work right now, we're using this table to calculate the tax that they're going to pay, right? This is the table that we're using to calculate the tax that they're going to pay. But in the previous years, you can see here, this was 2024, right? This was 2023, we were using this table. And then with something called rebate. You're not expected to know these things for now, but I'm just telling you because they talking about it here, that the amount is calculated according to tables provided by South African Revenue Services. These are the tables that we're talking about. I just wanted to show you that these are the tables that SARS is using. You can see this is the website for SARS. Okay. Now, this table change constantly as they are determined by the Minister of Finance in his annual budget speech. Yes, they're always changing now and then. Each and every year, most of the time they change, but sometimes they don't change. Just that everyone has to be aware of how much am I supposed to pay as a tax, right? The determined amount is paid to SARS, right? An account is created, namely SARS Pay-as-you-earn, which is a SARS Pay-as-you-earn system. After we have calculated your salary, after we have calculated your tax based on your salary, money, that amount of money will be paid to SARS. That will be a tax that will be paid to SARS. As I told you here that pension fund is paid to Alexander Forbes. We do have other institutions that where we're paying. Sometimes it is paid to Avbob. Sometimes it is paid to Old Mutual, right? We do have different institutions where people, where companies, they paying pension fund for their employees. But when it comes to pay as you earn, this pay as you earn is what? Is a tax, this one, right? Pay as you earn is a tax that we're talking about now. It is paid to SARS. This one is paid to SARS, South African Revenue Services, because they are the ones who are handling tax for employees. Okay? They are the ones who are handling tax from employees. Okay? At the end of the month, the business must complete EMP 201, right? That is forwarded to SARS together with the income tax payment. What is an EMP 201? What is an EMP 201? Just a high level understanding. this is not yours for now, the money, but it's something they have to talk about while I'm teaching you. EMP 201 is a document that we have to complete for each and every employee. If I have 10 employees in my company, I'm going to complete 10 EMP 201 forms. Those are the forms indicating how much each of my employees are earning and how much will be their tax that will be paid to SARS. Then I take those EMP 201 forms, I send them to SARS, and I pay the amount that is indicated by that form. Right? EMP 201 is a form where taxation for an employee is being calculated. The amount that I'm paying, if I pay 10,000 for one employee as a tax, which means that 10,000 is calculated on that EMP 201 form that is going to be forwarded to SARS. Are you still following?
Yes, yes.
Okay, what is more important is that you have to understand that pension fund is deducted, income tax is deducted, right? That one is a must. You need to understand that, money. But certain things here, they are in detail, obviously. You're still going to learn more about them as you go to grade 11 and grade 12. But you need to understand that SARS tax is paid to SARS, right? Okay, at the end of the financial year, which is 28 February, all employees receive IRP5 that indicate each employee's gross salary for the year, as well as amounts deducted for pay as you earn and SITE, right? Standard income tax on employees. This SITE, it means standard income tax on employees. We're going to talk about that. IRP5, that is another form. This EMP201, this one is completed monthly, which means it indicates monthly salary for each and every employee, and it is forwarded to SARS with the payment. But IRP5, that one is done once a year, which means it indicates an annual salary, which means that is salary for 12 months, together with the annual pay-as-you-earn payments that were made to SARS, which means now it combines 12 EMP201s, salary together with tax. That is IRP5 document. It's a document, same as EMP201, but that one is completed once a year. It indicates an annual salary, it indicates an annual tax that has been paid by the employee, and then that document will also be forwarded to SARS. Each employee must complete an income tax return in order to determine whether he or she has paid enough income tax during the year. In case of an overpayment, SARS repays the taxpayer, but in case where too little pay-as-you-earn was paid, the taxpayer must pay the outstanding amount to SARS. This one, what can I say about this is that each and every month, when this EMP2 are completed and payment is made to SARS, sometimes it's possible that you do the incorrect calculations there. You may underpay or you may overpay SARS. If you overpaid SARS for this 12 months period, then they're going to refund your money. But if you underpaid them, they will request you to pay more, right? Then what is SITE? I did say this is what standard income tax on employees, right? On 1 March 1088. This is very long time ago, right? A standard income tax on employees system was introduced. According to this system, income tax is deducted on all income received by employees. Standard income tax on employees is not a different tax, but the calculations are done at the end of the financial year rather than monthly. I'm not too interested in this one, right? I'm not expecting you to worry yourself about it. But I'm expecting you to know pay as you earn. This one is very important. SARS pay as you earn, you must know that. But this one, I'm not interested on it. So I'm not expecting you to worry yourself about it. Okay? Are you following? Number one, pension fund contribution. That's what we've spoken about. Number two, income tax. Those are two deductions. esithethe ngazo up until now, right? Pay as you earn, which is tax, and then we have pension fund. Now, the next one is medical aid fund contribution. Now we have what? Medical aid fund contribution. What is that? In most businesses, it is compulsory for all employees to be members of a medical aid fund. You see, this one is a choice. It's not a must. It's not in law, or it's not compulsory for all employees to do what? To join a medical aid fund. But in most businesses, it is compulsory for all employees to be members of medical aid fund, right? For their own benefits. Yes, medical aid fund is for employees' benefits. But some of them, sometimes they choose not to join medical aid fund. But in certain scenarios, some companies, they force them to say, if you're working here, all of you are going to join a medical aid fund, right? The employer may also contribute towards the medical aid fund for those employees. The deduction as well as the employer contribution is paid to the medical aid fund at the end of each month, right? Now, let's talk about this one. Medical aid is 1,200, right? Employer
Yes.
may also contribute. Yes, yes, yes.
Aren't us usually like when we do the salary the salaries journal, are we
Yes.
always given specific amounts of how much the employer and the employee must contribute to like a percentage, how much they must contribute to either UIF, medical aid, or pension fund, or is there a specific percentage that must always be contributed?
For medical aid, ne? No.
And UIF and
For UIF, there is a specific percentage, right? It is 1%, right? 1% of gross salary. That one is a must, right?
Mhm,
1% of gross salary is for UIF, right?
mhm.
But for pay as you earn, it depends on the tax tables, as we said. UIF, 1% of gross salary, which means regardless of how much you're earning, 1% of that would go to UIF, right? For example, this 5,000, 50,000 here, if I take 50,000 multiply by 1%, right? Multiply by 1%, which is 0.01. You can see that the UIF is 500 rands. Can you see that? UIF
Yes.
is 500 rands if I say multiply by 1%. But there is a limit for UIF. No one is paying 500 rands per month for UIF. The UIF is limited to 127 rands. You can't pay more than that, right? But I'll talk about that. But it has to be 1%. So if I'm earning 5,000 rands as my salary, 1% of that will be my UIF. So if my gross salary is 5,000 rands, then my UIF, which is going to be 1%, right? Which is going to be 1% of gross. This one is always like this, right? So if I take my 5,000 multiply by 1%, how much am I going to get? It is going to be 50 rand. 50 rand will be my UIF contribution. So that one is going to be negative. 50 rand, that is going to be negative. Okay, as my UIF, as a deduction. So you were talking about pension fund. Pension fund, yes, they can also tell you how much to contribute, but sometimes the company decides for you. There is no specific percentage for pension fund. No, there's no specific percentage for pension fund, but the company you're working for determine how much you're going to pay. There's no specific percentage, but UIF, everyone, someone working at ShopRite, someone who is a teacher, someone who is a nurse, a doctor, all of them, they pay 1% of their gross salary under UIF. It's based on labor law. And then which medical aid, there's no specific percentage on medical aid, but we're going to talk more about it.
So,
Yes.
so so pay as you earn, it's based on the amount of money your salary is.
Yes, but also it is calculated based on tax tables that I showed you
The one
here,
that
right?
okay, yeah.
It is
Um,
calculated.
we
Yes.
have done like a table like this, I think, where like we're calculating um how much a person will pay based on their salary.
Or you did something like that in class, ne?
Yes. And I think it is gonna be there.
On the test on Monday.
Mm.
Don't worry, then I'll do it with you then. Thanks for indicating that. I will definitely do that with you. You can see here, did they talk about a rebate from that calculation?
No.
They didn't talk about rebates, nah?
Mm-mm.
Okay, because rebates, they're also part of the calculation. You see, if we follow this table, but I'll do a calculation with you. If we follow this table, we take your annual salary and check where does it fall within this category. If you're earning 300,000, you can see 300,000 is above this category. Ne? So it doesn't fall within this category, but it falls within this one. Ne? So if you're earning 300,000, which means your tax will be somewhere from, this is how we're going to calculate your tax. Number one, you're going to pay 44,118 plus 26% of taxable income above 245,100. So that's what we're going to, this is how we're going to calculate your tax from this category. But if you're earning 600,000, we need to check which category now 600,000 falls within this table. And you can see that 600,000 is here. So which means I'm going to use this line to calculate your tax. But I will do that with you. Ne? I will do a calculation with you on how to calculate it tomorrow when we do all the calculations. Ne? For now, I want to
Okay.
talk about the deductions, all of them. After that, we're going to work on calculating them. Ne? Now, any other questions so far?
No.
Okay, perfect. Um, then while we talk about medical aid, you see, I said to you, we did say that you're saying in most businesses, it is compulsory for employees to become members of medical aid. There's a reason for that. There's a reason why those companies, they will enforce their employees to join their medical aid. It's because of what? Because many businesses are negatively influenced by HIV and AIDS pandemic in South Africa as a result of absenteeism, right? In South Africa as a result of absenteeism due to long periods of illness and death of staff members. So sometimes this is the reason why they will say everyone must join a medical aid, so that like if you get sick, there's a way of you being treated. You can go to the private hospital, then they can sort your stuff very easily, quick, and then you go back to work. They're trying to help them by doing that. So we do have many different diseases. People can get sick, they can get into accidents and all of that. So they need medical attention. So sometimes there is a reason why they will say everyone must join a medical aid, right? Productivity, profitability, health, and safety, as well as morale in the workplace are all negatively influenced by the pandemic. So once you start getting sick, when the employees are getting sick, which means they're not going to work. They will not come to work because they are sick, right? Even if they do come to work, they will not be productive, right? So the company is losing in that scenario because the company will not be able to generate enough money for that day when employees were sick, when employees were off. You see, so having joint medical aid, it helps employers, it helps employees to say, even if you are sick, you go to see a doctor, you come back, medical aid pays for you. Even if you don't have money, medical aid will pay for you. You get treated, you come back to work as quick as possible. So they're trying to do that because if you get sick and you don't have means to go to the private hospital, you don't have means to go to hospital and all of that, it becomes difficult for you, and that sickness can take long, a whole week or 2 weeks, even a month. Then who's going to work for you? How are you going to get a salary? There's no way you can get a salary. So sometimes that is the reason why many businesses, they make it compulsory for all employees to join medical aid, right? Let's see here. Due to AIDS, medical aid funds becomes depleted, which is possible. Although medical aid funds only pay a small amount for a person suffering from AIDS, the problem is that the immune systems of someone who is suffering from AIDS is so weakened that this person is admitted to hospital for other diseases such as pneumonia and not for AIDS. Medical aid funds then have to pay out large amounts for treatment of these illness. Yes, a lot of different diseases, not just HIV, not just AIDS, but even pneumonia, as they are saying here. All they do, with the reason why they're saying you must join medical aid is to protect an employee, right? But also they're trying to protect their investments. Businesses, they are so clever. They are so clever that they're making it as if they're protecting you as an employee, but also they're trying to protect their investments to say, if these people get sick and they're unable to work, obviously the business will die, right? If all employees are not coming to work today, how is the business going to make money? Just look at Shoprite. If all employees for Shoprite can say we're not going to work for the whole week, what's going to happen at Shoprite? The business will die. There's no way that a business can continue operating without employees, right? When is Shoprite going to get time to hire new people? When is Shoprite going to get time to train those people? Because they will not come to work, even if they hire them within a day, they will not be able to do the work within that day, the same work that other people were doing. You see, it becomes a problem. So the businesses are trying to protect themselves to say everyone must join a medical aid so that when you get sick, you have an option to go to the hospital, right? How can HIV and AIDS influence the business? Let's see. Persons who are HIV positive become ill and their work is eventually influenced because they work at a slower pace, you see, due to lack of energy and are absent from work often, right? Medical and pension fund costs become astronomical and the employees' sick leave are soon depleted because they keep on asking for a sick leave. They get sick now and then. Other people need to be trained to do the work, which is costly for the company to say, we do have someone we hired for this job, but this person is sick now. Now we need to go and find someone else to do the job. But that person has to be trained first, which is going to be costly for the company. So they're trying to avoid all those costs. That is a burden that HIV and AIDS came with on the businesses, right? This results in additional cost for employer. As a result, productivity and profitability decreases. You see, so when they're telling you to say join medical aid, they're trying to protect their profitability and their productivity. But nowadays, those things are no longer like this thing of HIV and AIDS is no longer like effective now because people they do have ways of preventing it and all of that. So it is no longer a big issue, right? It is no longer a big issue in most companies, right? Most companies, it is no longer a big issue. People they do have a way of like preventing it not to happen. There's less people who we can say they're unable to work because of HIV and AIDS. No, most people who are at work, they are able to do their work without having any issues, right? May a worker with HIV and AIDS be dismissed? That is not allowed to dismiss an employee if an employee is sick. However, if that continues to happen over and over, and you see that an employee is unable to do their work now, then obviously you have to retrench those employees, right? Um, if you can't do your work, even if you get sick and you're unable to do your work, there's no way that they can carry on with you. They have to obviously dismiss you, right? But if you are sick, but you are still able to work, then they must try and find some lighter work for you. They cannot just retrench you or dismiss you just because now you are no longer able to do the work that you were doing before when you were still okay with your life. Okay, let's see here. An employee may not be dismissed because he or she is HIV positive or has AIDS. An employer may dismiss a worker if her or his health has deteriorated such an extent that he or she is no longer able to do the work. You see, if you're no longer able to do the work, there's nothing the employer can do. Obviously, they're going to retrench those employees, right? But then the reason for dismissal is disability due to ill health or injury, incapacity, which means now you are no longer able to work, right? Your health is no longer allowing you to do the work. Then they have to dismiss you, right? They have to dismiss you. Obviously, there is a good practice code to say someone who is sick, that dismissal, they must dismissal according to Labor Relations Act 66 of 1995 determines that the extent and seriousness of the disability must first be investigated, right? Obviously, there must be those investigations before you are being fired at work. They must have done intensive research to say, is this person still going to provide us with a service that we wanted from him or her? If not, then they're going to allow you to go home and rest, right? Then we have all other this information that we need to know. In the first instance, according to labor, the employer must request a medical certificate from the employee, right? There must be medical certificates that will come from hospital or clinic or from the doctor. The employer must request an investigation by an independent doctor of his or her choice in order to confirm diagnosis. The employer must request the employee's doctor to suggest that his or her client have an HIV test done. Therapy before and after an HIV test is important. And those are all like things that needs to take place before the employee is being fired. The employer may not force the employee to have tests done. That is not allowed. This must be done voluntarily and the results must be kept confidential. If you are an employee, your employer has no right to force you to say, show me your HIV test, the results, what's for any sickness, not just HIV only, anything, right? They have no right to say, to see what are your health conditions. As an employee, you must be able to stand for yourself to say, no, you don't have a right to see this. If you don't want to show it, you don't want to show it. But you may have a proof that you are sick, you are unable to come to work because you are sick, but they don't have the right to know, right? They don't have a right to know what kind of sicknesses you had that made you unable to come to work. If the employee is absent for a long period, a temporary worker may be considered. Yes, obviously. If you are no longer coming to work, who is going to do the work that you are supposed to do? No one. So the company must try and find someone else to replace you temporarily until you come back. The employee must also be given alternative or lighter work to do, right? The employee may only be discharged at that point where he or she can no longer do the work. You see, if you can still do the work, even though like you get tired very easily, or maybe you're unable to spend long time doing the work, long hours doing the work, they must try and find something lighter for you to say, okay, fine, do this work. You will do it while you're sitting down. When you're tired, you rest a bit and then you carry on, but you're still doing something. Then that's what they need to do. But to say go home, even if you can still be able to do something, they must try and find lighter work for you to do, right? After hearing has been conducted and after enough time has elapsed, counseling provided and serious attempts have been made to adapt the work to the employee's abilities, the employee may be discharged if he or she is no longer able to do the work. Yeah, that is an unfortunate part, that if you're still unable to do the work, they must release you, allow you to go home and rest. Obviously, there's nothing they can do. You must remember that HIV positive workers must be allowed to work under normal circumstances as long as they are medically fit to do the work. Yes. They may, under no circumstances, be discriminated against. To say if you are sick and you are able to do the work, they must allow you to carry on doing your work as an employee. They can't just say because now you have an HIV positive, now we cannot work with you. what is HIV going to do to them? Because you're not just going to transmit it to them just because you have HIV. Now they have to discriminate you and all of that. That is not allowed, right? It is against the law. Employers should take all reasonable steps in order to refer employees to available and suitable health, welfare, and psychosocial services. But those things, they're not doing it. Like when you're an employee, you're working for someone, you must make sure that you take care of yourself as an employee, because most employers, they don't care about their employees. That's something you need to know. Employers, they only care about their profit that they're going to make by utilizing employees. So once you start having problems, you are on your own as an employee. That's why it's very important to take care of yourself. If you feel that you're exhausted, take a break, take a leave, go and rest, come back to work the following day, you are refreshed, right? Don't overwork yourself because you want to impress your employer. That is not a good thing for you. That is not a good thing for your health, right? So you have to protect yourself as an employee. Now, unemployment insurance fund. All employees must pay unemployment insurance. You see, this one is not a choice. It is a compulsory. It is something important that everyone pays unemployment insurance fund, right? What is this deduction for? You need to know, why are we paying unemployment insurance fund? The employer must also contribute to the unemployment insurance fund. You see, you're not only the one paying, but the employer as well must contribute. The contributions, that's what I said here. If I pay 500, the employer must also, contribute 500. Okay. So which means now 1,000 rand is paid to the fund, right? 1,000 rand is paid to the fund. Why is this money paid to the fund? We need to know about that, okay? Now, the contributions by the employer and the employee are paid to SARS at the end of the month, right? Just as in the case of income tax, the business must complete EMP 201 and pay the UIF contributions, employer and employee contributions to SARS on a monthly basis, right? This amount, it is paid to SARS on a monthly basis. Do you know why why employees have to contribute to UIF? Do you know what is the reason for that?
No.
Okay, no problem. You see, when you're working, Limani, let's say you are hired by a company, right? Maybe you work for 5 years. Within these 5 years, obviously, you are going to contribute to a UIF, and they also going to contribute for you. If that company decide to dismiss you, you will be unemployed from there. And then you're no longer getting a salary. Last month, you got your salary and you were doing well because you have a salary. You're able to support your family. You're able to do, like, you're able to sort out your expenditure for the month. Now that you're unemployed, how are you going to survive? You can't, because you're no longer getting a salary. So that's where UIF comes in. The time you become unemployed, you are going to be able to claim all these monies, right? It's not like you're throwing them away. When you contribute to UIF, you're not throwing these monies away, but they will help you in future during the time where you lose your job, right? During the time where you're no longer employed or you lose your job. Maybe some people, they work for maybe 5 years, then they're unemployed for 4 months, 5 months, then they find another job, they go and work for another company. Within that period where you're still looking for another job, you are unemployed, you're not getting a salary, UIF will pay you. So you will still getting a monthly salary. You will still be, even though you're unemployed, you will still be getting something from UIF, even though it's not going to be equal to your salary that you were getting from your the time you were still working. But you will get something. If you were earning 5,000 per month and then you're no longer employed, maybe you will get 3,000 per month, right? You'll get 3,000 per month for you to survive while you're still looking for another job. That is UIF, right? You making those contributions for the purpose of what? For the so that like they can help you when you become unemployed. Yeah.
Okay, I wanted to ask can you please tell me the difference between pay as you earn and income tax? Because I'm a bit confused.
Difference between income tax and what?
Pay as you earn.
Pay as you earn. Income tax and pay as you earn is the same thing. That's why I said here. You see here, I said pay as you earn and then I said tax in brackets. Can you see?
Mm-hmm.
Pay as you earn and income tax is the same thing, right? Just that income tax, just that income tax for pay as you earn is actually income tax for employees. The income tax is like there's a lot of different income taxes that people pay, right? There's a lot of different income taxes that people pay, but for as an employee, you pay a pay as you earn. So pay as you earn is the income tax, right? It's not different. It's the same thing. Does it make sense?
Yes.
Yes, there's no difference between pay as you earn and the income tax. It is the same thing. Just that we call it a pay as you earn because it comes from your salary. It's a tax that is paid based on your salary. It is a pay as you earn because of that. Other
And
than that, yes,
and not everyone so not everyone pays the income tax it right. If your salary is like too small, you don't pay the income tax.
yes, not everyone is paying income tax. You only pay income tax if you're earning above 8,250, right? Only those who are earning above 8,250. If you're earning above 8,250, then you pay tax, right? But earning less than 8,250, no tax, no tax paid, right? No tax paid. By saying tax, I'm saying pay as you earn. You pay your pay as you earn. So which means on your pay slip, there will be this deduction, which is a pay as you earn, right? But if you're earning less than that, there will be no pay as you earn. There will be no pay as you earn from there, right? Are you happy with that?
Mm-hmm.
Okay, then there's skills development levy. This is the last deduction that we're going to talk about. The government has decided to finance skills development through a national development fund, right? There's a national development fund. If you're having employees that are working for you, you must develop them as an employer, right? The objective is to improve the skills development by forcing employers to pay skills development levy, right? This one is not a deduction from employees. That's why you're not going to see it here, right? You're not going to see it here because it is, you're not going to see it here because it is not paid by an employee, but it is paid by employers, right? And encourage employers to claim a part of the levy in order to develop their employees' skills. So employers are the ones paying skills development levy, right? So now an employer who is not registered for pay as you earn and whose salary expenses do not exceed 5 million per year is not eligible for payment, but must still register for levy with SARS. The total salary of your employees must exceed 5 million per year. Then you have to register to pay a skills development levy. But if they're less than that, you're not going to pay it. So if when you have about 10 that are working for you, you're not going to pay this deduction as an employer. There will be no skills development levy because it doesn't, like the salary you will be paying those people, it doesn't exceed 5 million. But those employers who are paying people more than 5 million per year, we talk about big companies here, most probably Shoprite. Shoprite, Checkers, how many employees are working for them? I'm sure in a year they're paying more than 5 million to their employees. Then they have to register with SARS to pay the skills development levy. And look what they're saying here. The employers have to pay 1% of their gross salaries or wages over to SARS. That is going to be a skills development levy that has to be paid by the employers. It's like a UIF, but it's 1%. You see, UIF is 1%, skills development levy is 1%. It has, but this one has to be paid by employers. That is a difference. That is the difference. So these are the 5 deductions that we just spoke about, Limani. It's just for an understanding, né? So that when we start doing these calculation, you know that you can see here the deductions we have is pay as you earn, UIF, and the medical aid only. Those are the things that we're going to be working on, and we are able also to do the general ledger, the skills development levy, pension fund. We're going to be doing general ledger for all of these ones. Okay. Any questions on your side?
No.
No questions. Okay. Thank you, Limani, for your time. I'll see you tomorrow, 8 o'clock in the morning, right?
Um.
Are you available for that time?
Um.
You will still be sleeping.
No, I'll have training, so